Hello traders, this is Alex with the StockMatrix program. We did have a few trades Friday on that correction in the indexes of the stocks. We'll go through those here in a second. Here is our X account, which has all the trades that we posted, so you can go through then review them, a few of the charts, and the portfolio. Speaking of the portfolio, let's go ahead and go and look at that. You can see that these are the three trades that we exited. Tesla was a small profit, Coinbase was a decent profit, and Procter & Gamble was a small loss. So I guess on the exited trades, we gained a little bit, which shows up here. Again, on the $150,000 fictitious account, we've got 7% equity gain in less than a half a year. I guess that's okay. We've been oscillating between 45,000 and 35,000. Now we're at 41,000, but we have flipped a few, right? So again, Adobe, of course, gap down, imagine that. And we had Procter & Gamble go down, and now we've got puts, and Coinbase also, which again was one of those that we had on for quite a while. All right, let's now go to the StockMatrix charts. First, we'll look at the statistical page of the StockMatrix program, and you can see these are the upcoming annuals. I kind of left the ones that were over Thursday, Friday, and of course the weekend now, so Monday ones. So we do have a few that kind of are important. ED, which was, been one of the bulls and now a little bearish. Adobe, of course, had one come over the weekend, which again we just had a big gap down today, so it might have been a little early. JPM, the diamond, had one coming in this weekend, and Cintas, which is kind of up there near its highs. We do have a few 45ers coming in, nothing too major there. Here's the actual stat sheet on the, again, if we were trading 100 shares, this would be where we'd be at on the current positions, right? Not the historical taken off ones. So again, you can see just kind of hanging in there. We do, out of the best, Microsoft is the big bull, and of course it would have the most profit. And let's go back, see what the Microsoft has done on the option page. Hang on, I'm curious. It shows about $9,000, but again, we paid, it's currently our actual value, which we've made is $6,200. So you can see that so far you'd be much better off with the 100 shares, but again, percentage-wise, right, you'd have to put in $47,000, and we only put in $6,000. So again, percentage, a lot of people like percentages, which are kind of a trick, right, of the industry. But percentage-wise, you'd be way better off doing the options. Of course, there's people out there preaching, "Oh, the options don't work. The options don't work." I've been doing this now for free for you guys to show you how they work, right? I'm not trying to advocate anything. I'm not asking for any money. So I'm just showing people how the options do work. All right, let's go to the charts. I'm going to buzz through these pretty quickly. June 18th is our next zone, which is Wednesday, and it's in the evening. So again, we'll have 3 days of this next week to plot wherever it goes, right? Here's NVIDIA, NVDA, and our stops down here, which again, we'll be moving that Wednesday after the close to here, unless, we get ugly in the meantime. Here's the one-to-one support. So this is a logical, the solar eclipse close. I always like to see it test this at some point. So to me, that's a logical area and not terribly weak, right? Because we're above the one-to-one, but I could see that happening just on a quick measure. Here's Meta, Facebook. You can see that just kind of there, right? No big deal. Inside the previous range. Stops are down here, so nothing really new to report. Obviously, the one-to-one off the lows becomes support right in that region around that 650 area. Here's Coke in that diamond pattern. Now we're starting to run out of the time slot. So again, we do have a squaring of this range for you GAN folk. The squaring of the range comes in right in here. So this moon period is probably the last hurrah for the sideways action. I think from here on out, we'll go either direction, right, up or down, depending on which way it breaks this diamond type pattern. Here's Google, kind of just up there, kind of a slower one, right, kind of the pooch. A weird outside event last moon period. Again, it did already check out the solar eclipse close, kind of been on it for quite a while, so not necessary to go down in there, but you can see that next moon period, we square out this range. Plus, it's the halfway between the solar eclipses, which is an important period for me, since I like the solar eclipses, for June 25th moon period. Microsoft, again, the bull of the bulls, we had this weird-ass gap, which, again, I think they have their own AI, but they couldn't forecast this any sooner. Anyway, one of my bitches about these AI things. The stops moved here. We'll get to moved here. This is a big bull, and it's not breaking. So it's kind of a creeping bull, which is the best out of all the bulls, right? Because you just keep looking. All of a sudden, if you're short, all of a sudden 6 months from now you lost 10 grand. You're going, what the heck, So it's one of those creeping ones. It doesn't get people too nervous about being short. It just keeps losing money every week, and the people long keep making money. Here is Amazon. Again, kind of creeper, but it's getting up here to the down one-to-one. So the old 360 from one of the previous lows, which we took out, but I kept it in here, so I knew that that's a cycle of that previous event. Let's go back and see where, yeah, this old high here. So anyway, no big deal. But if you're looking for places to trade, right, and you have some confirmation that there's some action available, then you like to see these little things that help you make your decision on which way to go on your trading platforms, whatever you're trading, stochastics, moving average, whatever. Here's the Apple again, kind of a chopper. It did turn negative, so that short-term trend is now down, even though we're long. I don't like this trade. I don't like Apple because everybody has it in their portfolio. It's hard for me to say, oh, it's going to go up. No one's in there yet. Well, everybody's in there. And so if it's going to go up, it's going to be a slow creeper, I'm afraid. Tesla kind of got up there. Of course, we reported on it. The one-to-one coming off the highs was the resistance, and it did work. Had a big smash after that. Got us short here on June 6th. So we are now short that with stops over the highs. Had a mild close. It could have been more bearish for the guys who are short like us. We bought the puts, of course, but it just not real weak yet. Unproven, let's say. Let's get this. I don't know why I lost all my data over to the right here. Let's get Lynn back up here. I believe it's a hydrogen play, which makes sense. Big wild action, that bear trap we reported on. We've got a trap here, right? That's what I said. For every action is equal but opposite reaction. We had a bear trap here, and we have a bull trap potential. We don't know yet. Of course, it could make new highs and make the trap, right? So you don't know. But puts were definitely worthy, especially short-term ones on the trap system. I should probably do a couple months of just the trap system, but we'll see how many people respond to this series of videos. We're going to have probably 50 or 60 videos out there when we're all done. And you can review them at your will. They'll be on YouTube. So again, I'm not advocating anything. I'm just showing you how to use the options based on my system. Now you can use whatever system you like, but the options do work. Use them. It avoids the fear of a 9/11 and all that crap. And I can go, with my 401k, I can use puts. Not long puts, right? You can't sell puts in your 401k, but you definitely can buy puts, which is going short the market. So it's a way to actively be long and short the market without feeling like you gotta put a bunch of money in for margin or something. All right, here is ED, one of the bears that we kind of went up a little bit. So the trend long. Whoops, I forgot to report on that one, so that data is wrong. The short-term trend is up now, so just kind of a bear. I mean, it just looks. This was when everything made its lows, and the other bigger stocks and ED and a few of the other counter stocks were making highs. That's ED is one of those. Here's Adobe, one of the trades we put on. Stupid ass gap. Again, you know me, I've been bitching about Adobe now. I would have never put it in there. Now we got short probably where the market opened, I'm assuming. So again, no big change for us. We are coming on to the Cardinal Cross support, which is down in this area, that 375, 376 area. We're at the solar eclipse close, and we closed above it. So I'm not real negative Adobe, except for its long-term downtrend, which again, this one-to-one we were preaching about actually held in there and worked again. So a little negative on the long term. Short term, I'm unsure. I don't really like it. I think the options that the system has done real well. Now we bought it here and sold it here, so we made a little nibble profit-wise, but no big bite. Here's IBM. And again, one of the bulls kind of had a weak stick close. I don't like this slow meandering to the upside. It's not indicative of a stock that's undervalued, right? It seems this kind of action and slow bull movement is something that seems a little overvalued. Now they have their own AI, so that's part of the upward package in this AI area, or this decade of AI that we're in. Here's BK again, another one that's kind of got a trip top. I can't imagine them not taking that out. So we'll see how that works out. Again, it's a bank stock, so in New York besides, so it's a little tricky on its own merits, but I had to have some bank stock in there, and I went one with the oldest data, which I always lean to, and has high volume. So, and it makes the options more easily traded, right? So anyway, here's Procter & Gamble. Again, went short Friday. June 13th, 2025 was Friday. Today's Saturday. I'm doing this update. I wouldn't have normally done it till Wednesday, but since we had 3 trades, I'm going to go ahead and do it now. And here is JPM. You can see the stops are still at this level, kind of hanging out. I'd like to see a break back, probably quick break back to the solar eclipse, and I think that would be support, that 241-ish area. Coinbase got ticked into the short side, so, but again, we bought it here. It was a good trade. Even on the options, we made pretty good lick, percentage-wise big, but again, I hate percentages. Stops up here, so kind of don't like that stop too much. I mean, you got, next week, this will be the one-to-one coming down off those lows that you're seeing off of this low right here, which it wasn't the low, right? Because we did make a lower low at a bear trap, right? So for every action, there's an equal but opposite reaction. I would expect some type of trap or multiple. Well, we had a bull trap there too, so I would expect a trap possibility, even if it's going to go down. So anyway, Coinbase is what it is. Cintas again made a new high on the short term. Let's pop this out. I don't think it made a new high historically, but anyway, it's it's typical of these. Again, I've been preaching this. If you've been following me, this 20% decline, fast, five moon periods, less than 5 weeks, and then this is the action. So keep that in your memory banks. Now 10%, no big deal. Probably won't see that. Or 30%, it probably won't make new high. But again, this is the action. I do not buy new highs. Do not buy strength on Cintas or any of these markets actually. If you're going to buy and you can buy only and you hate to sell, buy the dip, please. Because again, I'm assuming we're overvalued up here a little bit. So I don't know any of that other good stuff. Well, let's go through the daily chart. NVIDIA on the daily chart kind of shows, kind of a getting heavy up here. Again, everybody has NVIDIA in their portfolio. All the insurance companies, bank portfolio, they all have NVIDIA in there quite heavily probably. So again, it's acting like it's got too many people long. Again, the 44 days over from the solar, I left this one, I adjusted the rest, but you can see it didn't really, it kind of held at the bottomish of the range. And June 27th will be, June 26th will be the 55 days over on all of these charts, except for the ones that made the low on the 8th, I guess. Here's Meta. Again, you can see just kind of there, right? The 14th was this high. This is the 14th here, again, because it's over the weekend. So this X has moved here. Again, pretty important. Had a poor close. It broke the uptrend line, which again, if it's a bull, right, you got to break something to the upside to have a correction. Otherwise, it's not a correction. We at least broke the trend line, the simple trend line. It might have been mathematical. Now let's just draw one in because we had a bear trap here. Okay, let's $5 per day, so it's a 5 by 1, you can call it. So anyway, that's support down here. So the mathematical hasn't been violated. Let me just run this one off here, and it also kind of squared it out. So again, $5 seems to be a pretty good speed line, right, of this trend. So the solar eclipse, of course, is support, which would be back here. So, and not only this solar eclipse, but the previous solar eclipse. So logically, if we have a correction, I'm assuming it's going to break down into this range. Coke, again, that diamond pattern is running out of time, or ran out of time. So I'm assuming whatever move it's doing will probably, you got to go with it. That's just the tendency of a diamond, right? If it makes a new high, go with it. If it makes a new low on the, the pinnacles, you go with it either direction. We did have 1994 low came in, and so at least we got some action here. We got a couple bullish annuals. I believe that's 87 and 97. So I guess a 10-year cycle. No, 81, excuse me. And a 97. So kind of pretty important ones coming in Monday. Here's Google, kind of the pooch, right? So I mean, you know me, don't buy the pooch. If you had two choices, buy Google or Microsoft, you buy Microsoft. Don't buy Google. It's a dog with fleas. It's not acting bullish as Microsoft is, right? Now, a lot of people, well, it's undervalued. I don't give a shit. It's like gold or silver. Don't buy the pooch. Anyway, here's Microsoft. Speaking of, again, it made a new high yesterday or Thursday. Had a poor close on Friday, but still up in the higher end of the range. Now, of course, the solar eclipse is way down here. Now, we've already tested it when it was making its lows a couple times, so not necessary to go down there. But if it does start acting bearish, we have this gap, which will probably get filled. And then you got the solar eclipse below that. So that's a good target on a hefty break. Let's say you do get out, take profits, and you're waiting for a break. I would wait for a bigger break than just a little few dayer. Maybe even buy put. Let's say you're going to stay long, but you're maybe buy puts against your shares. You've got 100 shares of Microsoft. Buy a put, at least out past August or September in time, because it's going to take some time to break. And then get out of it if you get down into this region on your put side. I don't know what the dividends are, but you have the put on, you still collect the dividend, right? So again, here's the solar eclipse also on the Amazon. Again, one of the pooches. It's acting okay, but it's just a pooch. We had 88 market days over from the high. Was this outside event, so the timing did work. Now, 88 market days, of course, is what GAN thing. 11 market days, not calendar days. So now, of course, 90 is important to a lot of the GAN folk. So, but 88 is to me the most important. Not 88, but the 11 sequences. 11. 17, 22, 33, 44, 55, 66 completes the matrix. So, anyway. I don't want to get deep into that. I could do a 2-hour seminar on that. Here's Apple. Again, everybody's got Apple. It's a pooch of the pooch. Undervalued for a reason, in my opinion. Um, and if Tesla comes out with a phone, Apple could get really hammered. Here's speaking of Tesla, again, kind of a weak stick. It went up, had a good view, had an immediately pound on some of the news. Again, that's why I like Tesla. I like that there's controversy. I like this action, right? I don't like that slow, methodical, and then you get a 2-day ripper. This is a nice 5-day break, man, caused by some weird news that they're perpetuating. So without that, this thing would be a dog. That's why I like Trump, Elon, anything they have associated with it causes volatility. I love volatility. But 11 days over was this outside day up, but it kind of faded. So the jury's out for Monday on the Tesla. I don't know the direction for sure. Leon, this radical bear trap, and now we have the bull trap again for a reaction. It was equal opposite reaction. So it makes sense that this is over, or at least temporarily. We haven't broken any uptrend lines to speak of. June 17th is 55 days over from the solar on all these markets, right? Not just Leon, of course, so that's important to me. And of course, it matches up with 110 over from the low here. So again, we got some. Lynn has some stuff coming in on the thing. Here is ED. 22 days over is Monday. We have a timing. We had a timing in here today, which I will probably move once I know where it goes Monday or Tuesday. If this is a high or not, or if it's a continuation. Now, gap up would be extremely bullish in my opinion, as long as it's not too stupidly big gap. Here's Adobe again. This is the one we got in. Look at that. Like I preached, this is how these draggy bull retreats, corrections, went up $100 almost, so wasn't too bad, but you squish it down, you can see that's kind of been the reaction is these same waves. I think Doge is going to get rid of a lot of the government Adobe contracts that we probably have. Nobody's even using, that kind of wasteful spending thing. So we broke the uptrend. We got a serious secondary event with a pivot that we went back and tried. We got through. So I'm extremely bearish Adobe. I think the system that bought the puts. We made a little bit, right? Because we bought it down here, got out here. I think we made $300-400, but I'm more comfortable being short. Let's put it that way. Here's IBM again. It's been a creeper. It didn't accelerate. Make new highs. You expect it not to have this. So now we popped another new high. I expect it to drop back. Definitely don't buy strength. 44 days over from the 7th. Was kind of no man's land right before the high. So I would expect it to maybe drop back. Here's the solar eclipse close, which we kind of tested, but not quite. So it could definitely go back down there. That's kind of the middle of the range, halfway back, that kind of thing. Here is BK, Bank of Magellan, New York Bank, kind of popped a high and just been holding steady. It's like, what? If you flip the chart upside down, it does look more like a bottom than a top. So again, I don't know. It's just kind of a weird trade. Definitely looks like it's trading overvalued, up in here above 88, undervalued, below 77. So again, I would expect it to go down to the medium, which is probably the 50 percentile-ish level, and the solar eclipse. So Procter & Gamble, one of the ones we went short. What a junk trade. Lost money on the trade, which was obvious. You look at the chart, a lot of stuff going on. As a pattern goes, just I don't like it. That looks negative to me. I don't know, like some major league high. Of course, they're in the news. A little controversy with them. As a trading one goes, it's great for trading. 10, 12 days up, 4 days down. 8 days rip back up. That kind of action because they're in the news. A little negative news. Some of their products are finding out to be a little problematic. So they have so many though, right? That's what makes Procter & Gamble a safe investment for a lot of people. Again, one of those that every big insurance portfolio has in their realm, right? Because it is a safer play. This is JPM, kind of acting weird. Not what I would have expected. This sideways action in the top side of the range looks a little heavy to me. So not a terrible close, right? But it did close lower Friday. Kind of broke through support and the short-term stuff. So our stop's down here, which is fine. Would love to get my stop pushed up a little tighter. Here's Coinbase, one that we went short, and you can see we just tripped us out here. But if I was trading, I would have been short up here because this was the day with a lot of stuff. And then we had a poor close. I would have probably been short the close, if not the opening on that gap down. But that's me as a trader. The system don't care about any of that. It got short at the low pretty much. So we'll see how that turns out. Cintas, the bull of bulls. This is a 1-to-1 trend line, $1 per day, market day, right? So that's a 1-to-1 trend line. Busted it with authority. Squaring out of that range was this low. So now it's up to the market to see if this is a corrective move or maybe more of a 10-day slide similar to this one. 1, 2, 3, 4, 5, 6, 7, 8, 9. A 9-day decline, and we're on day 1, 2, 3, 4, 5. So middle of end of next week should see, if it's a correction, it could be something severe like this, or if it's just a minor correction like this one, we've already had it, right? So again, I think Monday will be a pretty good tail of the trade. Again, 2022 lows came in to Friday. Let's go back and look at 2022 since it's not that old. Yeah, see right in here, this low, pretty important low, right? That was the chopper, so that's why I wanted to go back and look. Normally I wouldn't do that, but it's in our wheelhouse to look. So anyway, kind of interesting, pretty important to me. Makes me feel a little bearish actually, because that was a pretty important low. Now we missed it by 5 or 6 days is all. So from from the low to this high. Let's look at the S&P index. This is the E-mini. Again, you can see not much, but we did break the uptrend line. Let me see. We broke it once, twice. So we broke it two or three times. Let's see, $25 per day speed on this line that we drew in. So again, you can see 3 to 1. Anyway, no big deal. Now the sequence did work here. 33 market days over from the high was this low. That's why I left it. 77 was this high. So the sequences have been working. The matrix sequence. Here is the Dow. Again, pooch a pooch. Don't buy the pooch. Nasdaq's been the wood monster. Don't buy the Dow. If you're trading spreads on the indexes, don't buy the pooch. But anyway, here is all that. You can look there. We got Nasdaq did pop. I think it made a new high. 223.20. 223.24. We had the trap. I didn't catch that. I would have bought puts there. But anyway, we did have the trap. Reacted, Nick. Yeah, it should have skyrocketed, right, if it was a bull. So again, makes me concerned that we're at a major league top. So the action today on Friday makes me a little concerned. I'm pretty concerned actually. I think that was, because a good weekly chart closing on its high for the week on a bull sets up for strength Monday, Tuesday. Now with a poor close on Friday, now that sets up extreme weakness for Monday, Tuesday. Here's the QQQ, which is kind of the Nasdaq, but not quite. You can see we did not make a new high. So a little difference there on the look. So it makes that Nasdaq index a little more suspect like that. Definitely is more of a potential high. And the other one's kind of a double top-ish. Let's look at, I'm going to switch gears, kind of go back to my old roots in the commodities. This is the bond chart, a spot daily bond chart. And you can see the activity over the last few years is definitely a bottom. So, this interest rate does the opposite, right? So pretty interesting on the bond chart for sure. And looks like it either a continuation to the bearish trend or a potential bottom. Again, you don't know yet. Next up, I'm going to bring the crude oil. This is a spot daily. Of course, stupid negative 40,000 under. It can never go negative. Boom, down 40,000 negative. But this is a trend line that's pretty important. And we definitely broke it out today. The crude oil was up $4. Maybe even closer to $5 today. So that was a big bar in the chart. It definitely cleaned out. Gives this an appearance of a low. Again, I wouldn't be too wild of a seller until we get above this high. But you can see this is a pretty important trend line for me. So we're just kind of hanging in that. We're the highest we've been since this high. Well, the high was made in January of this year. So we haven't made a new high for the year yet. But definitely makes sense that we'll take this out, run a few stops. Now, if it's a bull, right, we keep going. If it's continuation of the bear or a continuation of the chop, which again, that's the trend, is the chop sideways. Next commodity chart I'm going to show is natural gas. This is a spot daily as well. All these will be spot dailies. You can see the wild action we had in 2022, immediately down in the hole. So the action here is kind of interesting. I don't know what to quite make of it. We broke back to the solar eclipse, so it makes me kind of supportive. I'm a bull above the coil, right, and a bear below the coil. The one chart that I was kind of waiting to see is the gold chart. You can see, again, the problem with the gold spot, again, commodities, that's what's tricky about it. Trades 10 years out in the future, right? So each contract. So the charts get a little mucked up and see some gaps, but this is kind of the lows, which match up with the spotness of the chart. And you can see that this is a 5x1 trend. So it's $5 per day. This coil got busted though today. That's again pretty important. The bull is not dead, not confirmed dead. Could be, right? But again, I'm assuming we'll probably pop new highs, even if it's going to go down. I think there's so much people poo-pooing gold and preaching silver and palladium and platinum and everything else. Let's see if I can get the chart up on silver. I took a few seconds here and did a DEES silver chart, DEES 2025, and you can see it trades out. It started in 2021, right? And I don't know if you can see it, but it got down to here, and then it got more active as we went. Now we did make a new high, fell back. Now I want to show you the weekly. This is a continuation of December only, not a spot, because again the spot is so junky. Again, to me, it makes a little more sense. I like all the D's charts anyway. They're year end. You can see this was the high back in 2011. Again, gold's a new highs every week or every month, right? Silver hasn't made a new high yet, so it's undervalued. So a lot of people are buying silver instead of gold, and that's been a mistake, a huge costly mistake. Now, eventually they might get out of it, but they can see that this chart is definitely interesting. It looks, it just keeps banging new highs. You buy the dip, right? It tells me not to buy strength for sure. Because look, you just, again, I'm not even new highs, but new swing highs by the dip, new swing highs by the dip, new swing highs by the dip, and it's a serious freaking dip. It's not just a little bit. So I mean, eventually it might just have a gap and go. Again, if this gets up here, I'm pretty bearish JP Morgan and some of these bank stocks as well that are short the silver. So pretty interesting charts. Okay, I'm gonna sign off now. Thank you, and everybody have a rest of a great weekend, and we'll catch you on the flip side Monday.